GEM International is a new diamond explorer in the richest diamond-producing country in Africa, located next to the fourth largest producing diamond mine in the world. International Spotlight is on an 1109-carat diamond, recently discovered in Africa by a fellow Canadian junior. With a proven operator and finance team, GEM International trades on the TSX Venture Exchange, symbol GI. Visit us at gemdiamondmining.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is market historian Bob Hoye. He's the chief investment strategist for Institutional Advisors. Welcome back to the show, Bob.
Yeah, Jim. Here we are again.
Taking a look at some of the trends that are making the markets today. We talk about the FANGs, but there's also been little groups of stock that really powered the markets. And then, of course, as they peaked, it was a good warning sign that perhaps good times wouldn't last forever.
Oh yeah, they you know, in a healthy bull market, all stocks, so to speak, are going up, and you have very good advanced decline ratios. And then as it gets more and more exciting as you get into the top, there are stocks falling by the wayside, and your advanced decline line sort of gets tired. And then in the final stages, there'll be some leading stocks, and they could be almost the only ones going up. And more recently, these have been grouped into called the FANGs, with you know, the big name stocks there with Google and things like that. And they went up. We monitored it through the NASDAQ stocks, the QQQs, and we did them individually as they blew out. And we should also mention that we were looking for a possible end of the bull market in somewhere in May, June. And then when you're with that, you want to make sure that you have enough excitement in the stock market to create a top. Indeed, we did have that, but then started looking at the FANGs and then recalled that in the huge bubble in 1999 into 2000 with the dot-com bubble, as it was called then, there was the market action, the big darlings were called the Four Horsemen, and the names there were Sun Microsystem, Microsoft, Dell Computer, and Cisco. And then when those rolled over, it was more or less the end of the market. That was a huge peak in March of 2000, a massive correction, then up trying to make a second attempt into September, and then it failed dramatically. And then actually I was around in the 60s in the stock market, and that was the period of conglomerate stocks and all kinds of great stories. But they now down into a group then of 50 stocks, and they were the Nifty 50 stocks, so late 60s. And they were also known as one-decision stocks, meaning you made the buy, and you never had to make the decision on the sell, which may have happened to some investors. But let's look at some of the names. Sears Roebuck. Well, there's a remnant of Sears, and they're shutting down retail outlets very quickly. Polaroid. Don't hear anything about Polaroid these days. Burroughs. I think that was a computer company. And then, of course, Eastman Kodak. And as you were saying, that one of their researchers had developed digital imaging, and they didn't really follow up on it. So anyways, these things are very faddish when the action is focused on them. And then, like all fads, they end. And so with our approach to it this year, well, actually going back to October, November, you know, October was kind of iffy, and often if there's problems in the market, they can clear in October. Then on November 3rd, that's when technical technical side got the springboard buy, and of course the election results were out on the 9th of November, and then it's been the Trump effect ever since. And then we had another springboard buy on the dip down into April, and on that springboard buy we figured, hey, this is going to run out till May or June, which can often be an important high on a seasonal basis. And so then, as I said, you want to watch it, and we ended up, of course, with good highs and good sentiment, good momentum, and in some cases, one of the stocks we looked at, it was the registered technical excesses unseen since March of 2000 on that bubble. So here's the way we look at it. Number one, is the stock market up when it should be? Yeah, around June. Then you say, number two, are there signs of speculation? Oh, outstanding momentum, sentiment numbers. And then three, you look and say, well, how good is the fundamental story behind the bull market? And of course, the most recent part has been the Trump phenomenon, whereby you would have a massive transformation from the most anti-business administration in U.S. history to what could be a very pro-business administration. But then there are many people, fans of the big state, as they call the deep state, that don't want to see this happen, so it's turning into a struggle. But what you have is that the stock markets, the financial markets, are ahead of reality. And the reality of changing the U.S. to a more pro-business, I believe will happen. But I believe it will take some time. So you have now excesses in the financial markets that it's like Wile E. Coyote up there. You know, he doesn't fall until he looks down. And here we are. I think some of the stocks are starting to look down, so they're starting to fall. So the signs are that you've had technical excesses that you only get at or near cyclical peaks in the stock market. And also, there's a tendency for great bubbles to blow out in May or June, and that goes all the way back to the South Sea bubble in 1720. And if I recall rightly, that high was over 1,000 pounds on that one in late June, and the play had started at something like 120 pounds a year and a half earlier, went up to 1,000 pounds, and then all the way back down again. And that one of interest on that one is that bubble occurred 9 years after a huge peak in commodities concluded. That was 1711, and then you move forward in time, and you had a massive speculation in commodities blow out in 1920, and then collapse in 21, and that then set up another period of inflation in financial assets. The action changed from inflation in tangible assets, crash, then inflation in financial assets, and then crash. So here we are now. There was a big high in commodities in 2008. Remember when that was peak oil. The whole world was going to run out of crude oil. And that drove the price of crude up to $147 to then fabulous excesses on technical measures and a long crash, a long decline in crude oil. So here we are, 9 years later, speculative high. So our conclusions are that there's enough evidence there to decide that the market is setting a cyclical peak now and would be followed by a cyclical bear market, which would pull the economy down as well. And so how do we determine that? Well, of course, we had our technical indicators, and we're getting weakness in leading groups. And so the idea here is that quite likely Europe and London financial markets, stock markets, would, on the peaks being established recently, quite likely the peak for the market. Now, in New York, you have a tendency for where Europe may have made a peak in May or June, that then, as in 1929 or 1873, New York went up and made a high on its own in September, and then rolled over. And then also we have the other instruction from history, is that after every great bubble, there's been a collapse of speculation, and each of the crashes, or these contractions in speculation, occurred in the fall, like beginning late September, and went down, and then effectively all of the disaster was thrown into the markets, where the power changes from central bankers to margin clerks, and then all the problems were basically cleared out by November of each of those bubble years. One of them, 1825, it took until December to clear the disaster, and then when you then have a relief rally. So all we do is look at history and look at the path to speculation, and then measure the degree of speculation. And I think the decision that this is a cyclical peak in the stock market is quite sound.
We'll have more with Bob Hoye right after the break.
I'm Bill McWilliam, president of Cascadero Copper, CCD on the TSX Venture Exchange. Cesium is one of the world's rarest metals with a growing industrial demand. Drilling is underway on our Tehran property in Argentina to prove up a cesium resource. Cascadero's patent-pending leach process has the potential to make Cascadero the lowest cost supplier of cesium in the world. Visit our website, cascadero.com, or phone us at 604-924-5504.
Avon Resources Limited is a gold exploration company with significant projects in British Columbia, Saskatchewan, and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the pink symbol ABN-AF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
Welcome back. We're speaking with Bob Hoye. Bob, what's the story on crude oil right now?
Yeah, well, we can go back to that big blow-off in 2008. And on that one, our technical readings were coming in early July. I was writing that we now have weekly upside exhaustion, in which case a cyclical bear market was possible, and noted that if the monthly signal came in, that then a secular bear market would be possible. And yeah, we got the weekly signal and we got the monthly signal. So the bear market started, and then going back to 2014, and then 2015, when crude was above 100, we're looking at the continuation of weak commodity prices, and said at some time crude oil could fall to 1/3 of its high, of that high then at 105 or whatever it was, or to 1/4, and then that would be relative to gold. But because that was the historical measure on the price crash in the 1930s. And so then, it wasn't it was that it was in gold terms. Anyways, crude oil did crash down to 27 in February a year ago, and has recovered. So when we were talking about the probability of a price of crude oil really going down, it was comparing it to what you had with natural gas, whereby the peaks would be up around $12 or $13, and then you went early in the game down to exceptional lows, and then the recoveries were sort of into the range of $6 or $7. So that's what we're looking at. And then along came the fracking for the that was, natural gas was first successful for fracking, and then along came crude oil. So, Jim, you've had a massive technological revolution going on in crude oil production. And so we looked back on history and on resources, and in the early days, you needed high-grade mines for copper, for example. Copper's the good one as an example. Then in 1910, mining at the Kennecott, I think it was, there at Bingham Canyon, just south of Salt Lake City, they then attempted to put into production a very large deposit for copper with gold credits. These were called, in geological terms, a porphyry. And it was successful. As a matter of fact, Bingham Canyon is still operating, and it's probably the biggest hole in the earth man-made, and it's produced a lot of copper. So you had a technological revolution where the mining engineers developed a way to mine low-grade copper. Then the next one was with gold in the 1970s with in Nevada, where they learned to put into production low-grade Carlin-type deposits, and then also for lesser deposits, the leaching-type deposits. So then you had gold production take that technological leap, and here now you have the same thing going on in crude oil and natural gas, a technological revolution. And you still got people who won't accept it and are out there thinking that someday, peak oil, all that story. But we have a technological revolution going on, and it will continue. And I saw a headline here today about that the U.S. is becoming the energy superpower due to technology and free trade and free markets. So the U.S. is starting to export, and whereas the liberals a decade ago were wringing their hands about running out of oil and we're going to need all this solar energy and windmill energy, it was a whole lot of dream world stuff. So
we'll have more with Bob Hoye right after this.
I'm Larry Ray, President and CEO of American Manganese, Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Keep informed. Receive our weekly recap of thought-provoking articles, podcasts, and radio delivered to your inbox for free. Sign up for the HowStreet.com weekly recap on our homepage, HowStreet.com. Welcome back. We're speaking with Bob Hoye. Bob, what does it tell us when one of those so-called FANGs, Amazon, goes out and buys Whole Foods for $13.7 billion? Does that mean our online seller is finally looking at bricks and mortar?
It could be. I haven't had a chance to really look at it, but the Amazon has done things that work, and it certainly builds assets in the business and drives the stock up, but we'll wait and see what happens with it, but it could be part of another revolution. But, when you get to the top of a long bull market, and this one has been going since March of 2009, there's a whole very powerful belief. And the other day I stumbled on a quotation by the economist. He was a liberal sort of economist, interventionist economist, John Kenneth Galbraith, but he could really write, and he came up with a paragraph, and I'll quote it on as a bull market becomes very enthused. The euphoric episode is protected and sustained by the will of those who are involved in order to justify the circumstances that are making them rich, and it is equally protected by the will to ignore, exercise, or condemn those who express doubt. And by gosh, that puts it together quite nicely about what it is like at the end of a bull market. That you have very strong beliefs out there, and the prosperity is wonderful. Governments enjoy the taxation, and then you also have the central bankers who think that their brilliant policies have created the bull market, and then it all changes, and followed by remorse, recriminations, and also a whole lot of rules and regulations brought in to prevent another crash. In the United States, the Securities Commission was brought in 1933 or 34 to prevent another great bubble from happening. Because at least then they were wise enough to know that the crash was caused by the bubble that preceded it. And then you even had one of the politicians that was backing the SEC who boasted that the SEC would put a cop, it would effectively be the equivalent of having a cop at the corner of Wall and Broad Streets. So let's take a look at how that agency did. Did it prevent a bubble? No, there's been a number of bubbles recently. And then you've had, after the 2008 crash, there was the Bernie Madoff huge Ponzi scheme and crooked and everything else. But there were at least two people had gone to the SEC with the fact that this Madoff Ponzi scheme was crooked, and they didn't bother. So they failed on preventing a bubble, and they failed on being a policeman. So this is the way markets are like. They have a will of their own, and when it's time to go away, it'll go away.
Bob, thank you so much for chatting with us.
Yep, Jim, always good to do it with you, and we look forward to next weekend.
My guest has been market historian Bob Hoye. He's the chief investment strategist for institutionaladvisors.com. You're listening to HowStreet.com radio. Find us on Twitter on Talk Digital Net. Our YouTube channel is Talk Digital Network. Questions for Bob or for the show can be sent to info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.